Welcome to The Money Hour with host Tina Mitchell and co-host Keelan Harvey. Tina Mitchell, MLO 145420, and Keelan Harvey, MLO 1330075, are licensed loan originators with Gateway Mortgage Group, LLC, and MLS 7233. The views expressed by the speakers on the following program are those of the speakers and do not necessarily reflect the views of Gateway Mortgage Group, LLC, nor are they necessarily endorsed by Gateway Mortgage Group, LLC. Now, in the studio, local mortgage experts Tina Mitchell and Keelan Harvey.
Well, welcome to the Money Hour on 1150 AM KKNW, the Saturday, September 29th show. I am your host and mortgage expert, Tina Mitchell.
And your co-host, Keelan Harvey.
Bringing in expert advice and inside knowledge on today's events in our local economy and how it can affect your money. If you're hearing our show at a different time or day, you are listening to a rebroadcast, but we're here to answer any questions or connect you with the guests that we have on the show. You can call the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. And the lineup for today's show, I have Mark and Eric Simmons with Arrives Appraisal Management, appraising in this volatile market. Also in studio, we have Stephanie Kristen with Windermere Real Estate, preparing your home for sale. Great information and great guests in studio. For more information on any topic discussed, please call the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. And we'll start out today's show, just as we do each week, with a little money chat.
Money.
Sometimes during Money Chat, we talk about what's happening in the market, we talk about the economy, we talk about tips, and sometimes we talk a little bit of mortgage talk, as Keelan and I are in the mortgage industry, and we are your mortgage experts right here in our local market. So there's a great opportunity to protect your down payment. So that's what I want to talk to you about today. Yes, down payment protection. It's risk-free home buying. Made it easy with the down payment protection. So it's hard sometimes to save money, and when you do save money for the down payment, to put that out there at risk in case something happens with the market. If you sell your house in a down market, that's really what this opportunity is for. So a down payment protection fulfills the emotion and the financial concerns about challenging real estate environment. So the down payment protection program is available for single-family homes and condos. So multifamily properties or commercial properties are not available on this product. It's for a primary residence. So if you're purchasing a second home or you're an investor, sorry, the down payment protection is not available for you yet. Maybe down the road they'll come up with something. And the coverage term is for 7 years with a 1-year claim waiting period. It's a lender paid, so there's no out-of-pocket additional cost, and the cover will cover the lost down payment up to 20% of the purchase price or $200,000, the lower of the two. So how they determine when you're ready to sell your home, whether the property has gone down and whether your insurance is going to kick in, is based on the Federal Housing Finance Agency House Protecting Index. Now, what this index does is it's a government, and it gauges the large geographic area to determine what's happening in that market. So again, it's government statistics that's tracking the housing market, and it's a publicly posted, so you can take a look at it every day and see what's going on with that. So protect a homeowner practice and possibility neglect. That's why it's based on the index. And so if for some reason something happens and in the property that there's neglect on that and something happens to the home, that's the reason they're using this index to determine that it really was market that warranted for that property to go down in value. Now, a claim example, so let's just say today you purchased a home for $500,000. You came in with a 20% down payment, which would be $100,000. 5 years later, again, the program's going to start after 1 year. The policy will start after 1 year. It'll go up to 7 years, and then that policy protection ends. So we're at year 5, and you decide to sell your home. That's when it's going to take a look to see if you need this protection or not. The home now sells for $450,000, which is $50,000 less than when you purchased the home. So you had a drop in the market. Now, the Federal Housing Finance Agency House Price Index is the same or higher than your home's $50,000 less. So if it's the same or higher, it's going to go off the 50,000. If it's less, it's going to go off of what that house price index shows. So you would receive 50,000 loss in value, 100% of the loss that you actually had. The other 50,000 that you came in with, that wasn't lost, so you still have that $50,000 equity in your property. So are you facing a hot market, resale inventory tight, worried about rates, prices, tax law? Down payment protection can be a solution for you. Now, if you're one of our sellers listening, what if in this market that you've seen a little bit of slowdown, a little bit more inventory, the buyers are not coming in multiples necessary to make an offer on your home, and what if you could actually have your home listed as a home that has a down payment protection program? It would make your home stand out a little bit, so you can use it that way for a seller to promote that listing. So homeowners insurance protects the four walls. Your home warranty protects appliances and the systems within the home. Now you have a down payment protection to protect the money in your house. Just a little bit that Keelan and I wanted to bring today to our Money Chat. Coming up next in the Money Hour, how do you appraise your home in a volatile market? Mark and Eric Simmons with Arrives Appraisal Management right here on 1150 AM KKNW after the short break.
As the process of buying and selling real estate becomes increasingly complex, it's important to have a trusted advisor you can rely on. With over 30 years of experience, Stephanie Kristen of Windermere Real Estate consistently uses systems that deliver results. By collaborating with her team of professionals, Stephanie makes the daunting task of buying or selling a home more manageable and worry-free. Her passion for service, combined with market knowledge, has resulted in hundreds of delighted clients.
Hi, this is Stephanie Kristen with Windermere Real Estate. There's a lot of information online today, but how you interpret that information is critical. I help buyers and sellers every day make sense of all that data. I'd love to connect with you and help you reach your goals. Check out my website, sheknowsrealestate.com, or give me a call at 206-200-0222. Thanks so much, and I look forward to talking to you soon.
You're listening to The Money Hour with your host, Tina Mitchell, and co-host Keelan Harvey on Alternative Talk AM 1150. Now, back to the show with local mortgage experts Tina Mitchell and Keelan Harvey.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell.
And your co-host, Keelan Harvey.
Right here on 1150 AM KKNW, the Saturday, September 29th show. It's a great day to talk about money, and that's what the show's all about, how to make money, save money, so that you can have a better quality of life for you and your family. If you're hearing our show at a different time or day, you are listening to a rebroadcast, but you can call the show at 1-855 400-1150. Again, that's 1-855-400-1150, or go online at themoneyhour.com. In studio right now, Mark and Eric Simmons with Arrives Appraisal Management. We're going to be talking about appraising a home in a volatile market. Mark and Eric, thank you so much for joining me in studio. First time that I've had you on the show, yes?
Indeed. Glad to be here. Thanks for having us.
So excited. And a little bit about Mark and Eric. Mark and Eric have both been certified appraisers for over 2 decades. I say 2 decades because I've been in the industry for over 2 decades, mostly in the greater Seattle area. In response to industry changes in 2007, they decided to start their own local appraisal management company. In 2013, they partnered with Arrives Appraisal Management in order to gain a referral network with national coverage. The majority of their appraisal assignments are in King, Snohomish, and Pierce counties, but Arrives Appraisal Management has coverage throughout the Northwest and across the country.
Mark and Eric, I'm so excited to have some appraisers in here with some different opinions. We have all these agents, and they have their opinion of the market, and I'm excited to hear what your guys' opinion of the market is. So we're hearing a lot about softening. Is this a fact? How's the market going? What are you guys seeing out there?
It is indeed a fact. I'm not sure that we're going to be much different. Our opinions are going to be much different than the agents you're having. And we started seeing in February, March, inventory going up, and a lot of the multiple offer situations and bidding wars and that sort of thing slowing down. So for the past quarter, and really across most markets, in preparation for the show, I actually pulled some data not just downtown Seattle and Bellevue, but I looked at Kent and Marysville area as well. And the numbers are remarkably similar. Inventory up, still near historic lows, but it's increasing. The trend is increasing. Days on market, again, increasing, but golly, less than 2 weeks still, less than 2 months of inventory on the market.
And the average market, can you remind the listeners on months of inventory, average would be?
3 would be a balanced market. So we're still, essentially, bottom line, we've gone from white hot to just warm.
Yeah. Isn't that
still
crazy,
good out
all
there.
of the talk out there that you hear when we're really still not in a balanced market, and we're quite a ways away from a balanced market when you look at the difference between 2 months and 3 months in inventory, correct?
Indeed. The trend is that way, and that's what we're looking at. But it's certainly not dire out there,
Yes.
for goodness sake.
Yeah. So, Mark, how is it for your appraisers in appraising in this environment compared to, let's say, 12 months ago when we had like some of the areas less than a week of inventory and days of inventory?
Right.
Craziness.
Well, again, we're not dealing with those purchase contract writers with bidding wars and escalation clauses and that sort of thing. We're having to follow up less on getting the information regarding multiple offers and all of that type of thing. We're seeing stuff selling pretty close to list, and so contracts are a little more typical. That makes it a little easier on us. Other than that, business as usual. It's slowed down a little bit. Oddly, I think rates have more to do with that from our end of the business because we also deal in refinances.
Yes.
And rates increasing means the refinance business slows down. Purchases have actually remained pretty stable or increased, but the refinances have slowed down for us.
Yeah, and so really, the only people that are refinancing, so a shout out, if you have equity in your home, there's still a lot of equity in your house and you want to be able to pull cash out, it's going to make sense a lot of the times to be able to do that. But otherwise, yes, you're not seeing refinances anymore. What about the comps that are available? Because you talked about there's not as much multiple offers, but also with the more inventory, is it making it easier because you actually have some comps that you can use to support the value, or is it more of challenging?
It actually is a little bit easier because values have stabilized and they're not climbing. That's always the most difficult market to appraise in, when things are climbing, especially like they were a year and a half ago. Just absolute craziness. All the data that we deal with, maybe 2-3 months old, that's not a lot in appraisal terms, but the market was moving quicker. So we had to deal with time adjustments on our reports, and there's still some evidence in certain markets for those, but not necessarily as ubiquitous as it was.
What about the regulatory changes? Are we seeing anything on the forefront as far as regulatory changes with appraisals, or?
There's a little bit going on in the industry. It's a little bit of inside baseball. I'm not sure how much your listeners want to know about the forms that we have to fill out as appraisers.
Well, if they look at the actual appraisal report, that should be an indicator that there might be quite a few forms on the behind the scenes.
There are indeed. There's a form.
How many are there?
There are numerous. Let's just leave it at that. There was a part of our form, part of the regulatory changes that came in after the crash in 2007. Fannie Mae added a market conditions report to our appraisals, which basically just tracked trends. And for some reason, they've decided that that's no longer needed. I mean, I think the addendum itself wasn't very well designed, but that looks like it may be going away just in time for the market to be changing again. It's a little bit ironic. Other than that, the form that we've been working with for the past 20 years, it looks like it's going to be revamped coming up in the next year or so, to provide more flexibility for appraisers to fill out, to provide the information, to report the information that we find. The form has been static, and software now allows it to be a little more flexible. So that's going to be updated for us. So that'll be a change as far as we're concerned. But, yeah.
And I know that there was a lot of, and we don't have enough time to really get into it in great detail, but it seemed like one day there was no appraisers, and then all of a sudden The next day, things went back to normal, but when there was no appraisers, one of the things that was coming out in the media is just about the apprentice thing and how you had to have they had to go through an apprentice program for 2 years, and it was just all of this stuff. And so what's happening right now, if there's anybody that's listening that's like, wow, you know what, I'd really like to take some of the knowledge that I have maybe in construction and other areas that I have in my passion with homes and get into the appraisal industry. So they're inspired to be an appraiser like you guys. What does that look like?
That hasn't changed.
So there is a still 2-year.
There's still a 2-year
So
apprenticeship.
how come all of a sudden it wasn't an issue when it was? So Eric?
Well, actually, they have come out and changed the field requirements to 1 year. But that's what Fannie Mae has come out and changed the field requirements for 1 year. So if you are an aspiring appraiser and you've taken the classes that you need to take, you still need to have field experience. And like Mark said, it's always been 2 years traditionally.
Okay.
Now, technically he's right. It still is 2 years because the state of Washington hasn't adopted that yet. But Fannie Mae has come out and said, okay, you don't necessarily have to have 2 years of field experience to become eligible to take the state certification exam. They have said you only need 1 year. But the state of Washington is reviewing that right now. And they're actually, about 6-8 months into the review process. I know that they interviewed a lot of appraisers, and they asked appraisers what they thought of the idea. And surprisingly, a lot of appraisers thought that wasn't a good idea.
Really? Really?
Existing appraisers thought that having a 2-year requirement for somebody to get into the business was a good idea because you have a little bit of an vested interest in maintaining your position as a.
Of course. And so from one appraiser standpoint, that makes sense. From an ownership standpoint, I would think that it would not, because that seems to be where the challenge was, is bringing somebody on and not really being able to have them do their own thing and have to tag behind for 24 months. So was that 12 months difference? Is that why all of a sudden one day the issue with having these extended, terrible turn times changed? What changed all of a sudden that now we've been back in a normal?
That was just a supply and demand. There's still pretty much the same number of appraisers. Not that many more have gotten into the market. It's just a matter of the transactions have decreased significantly.
Yeah, all right. Makes sense.
I got to ask, do you guys feel like we're short with appraisers? Like, do you think there's enough in our market? Like, is there a demand? Or is it, how does that feel? Are you guys just inundated with appraisals day in, day out? Or
We were, as Tina mentioned, a year ago, we couldn't handle the volume. And volumes have decreased, and it's a little more balanced in terms of the amount of orders we can handle. So things are fine as far as we're concerned right now. And as Eric mentioned, it really was a supply and demand issue. The industry, though, is aging. I mean, I think the average age of an appraiser is about 57, something like that. Yeah. And we're coming up against a lot of retirements. And it would be nice to get some younger folks into the industry. It is difficult. The biggest hurdle is getting work for those new trainees that will be accepted by lenders. And there's been some talk of opening that back up. In the old days when I got into the business, I could work as a trainee as long as I was supervised properly. And it's a little different now. Yeah,
it makes sense. So let's talk about from a homeowner. What can a homeowner do to help get ready for the appraiser, and anything in addition for real estate agents that are working with the homeowner that they might be able to do as well to make it a little bit easier and have a better chance of being able to support the value of the home?
Supporting the value isn't necessarily the issue. The value is going to be the value, and the comparables are going to tell us that.
Thanks for that disclosure.
Indeed.
Yes.
I have to say that.
Well placed. Yeah.
Can you tell I'm on the loan origination side already?
In terms of just how we do our inspection, though, there are some agents that are really wonderful and help us out and have access to the attic hatch and the crawl space all cleared out and ready to go. And but we're used to dealing with homeowners, and 99% of the time, they're sure their house is a mess, in quotes. If I had a nickel for every time I'd heard that my house is a mess. And especially the cleanest homes are the ones that complain the loudest usually. But I just tell them all, really, it doesn't really matter what's on the counters. It's what they're made of. That's what we're looking for. Yeah. But in terms of just from an appraiser's perspective, what I like to tell people is when I get questions, how could I improve the value of my home? My first piece of advice is to maintain what you have. Don't worry about making improvements, spending a lot of money. Make sure you improve. You're maintaining what you have really well. Make sure the foundation is clear, the paint, the roof, all the unsexy stuff.
Yeah.
So more or less like the deferred maintenance and that type of thing.
Indeed.
Yeah, as far as getting the house ready for an appraisal, we are taking pictures of the front, the back of the house, and all of the interior rooms. So it does make a difference to have it presentable as far as the front and the backyard and all of the interior rooms. Another thing that's helpful is if a homeowner has made improvements to the property over the previous 10 years, if they have a list of what those improvements were and approximate cost of how much money they put into the home since they purchased it, that's helpful information for an appraiser. And actually, appraisers are quite happy under most circumstances to entertain any information that a homeowner has in terms of comparable sales in the neighborhood. They're not going to get into a conversation about what the value of the property is before they leave, but certainly willing to accept a comparable sale that a homeowner has. That a homeowner provides to the appraiser that they think is a good match for the property.
Makes total sense.
Eric, is there anything that your company's doing to increase service levels or add value in the market? I mean, people have told me some management companies pay lower fees to appraisers, and therefore the actual service itself suffers. How does your company assure good service? Well,
we're an appraisal management company run by appraisers, so we're sort of the player's coach of appraisal management companies, and we take pride in making sure that the fees that we pay our appraisers are fair market rate fees. So we don't cast our orders out for bid to appraisers. We try and establish a good trusting relationship with our appraisers, and we assign those appraisals. We manually assign the appraisals to the appraiser and expect them to turn the appraisal around in a timely fashion and do good quality work, and for that they get paid a fair rate.
Love it. Great information with Eric and Mark, and we haven't had appraiser representation here for quite a while, and I'm just really excited to have you guys here. I just want to keep you around, so I'm going to take us to break
Tina.
and have you back. So coming up next on the Money Hour, we're going to continue our conversation with Mark and Eric, all about appraisals, and right here at 1150 AM KKNW after this short break.
As the process of buying and selling real estate becomes increasingly complex, it's important to have a trusted advisor you can rely on. With over 30 years of experience, Stephanie Kristen of Windermere Real Estate consistently uses systems that deliver results. By collaborating with her team of professionals, Stephanie makes the daunting task of buying or selling a home more manageable and worry-free. Her passion for service, combined with market knowledge, has resulted in hundreds of delighted clients.
Hi, this is Stephanie Kristen with Windermere Real Estate. There's a lot of information online today, but how you interpret that information is critical. I help buyers and sellers every day make sense of all that data. I'd love to connect with you and help you reach your goals. Check out my website, sheknowsrealestate.com, or give me a call at 206-200-0222. Thanks so much, and I look forward to talking to you soon.
You're listening to The Money Hour with your host, Tina Mitchell, and co-host Keelan Harvey on Alternative Talk AM 1150. Now, back to the show with local mortgage experts Tina Mitchell and Keelan Harvey.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell.
And co-host Keelan Harvey.
Right here at 1150 AM KKNW, the Saturday, September 29th show. We are here to help you build a strong financial blueprint 1 week and one show at a time. If you're hearing our show at a different time or day, you are listening to a rebroadcast, but we're here to answer any questions or connect you with the guests that we have on the show. Please call the show at 1-855-400-1150. Again, that's 1-855-400-1150. And in studio right now, we're continuing our conversation with Mark and Eric Simmons with Arrives Appraisal Management. And we're talking about appraising a property in this maybe not completely volatile market, but it's changing, and it's changing every day, and interesting in where it's going. So thank you guys for sticking around for an extra segment of the show.
So I got to ask you guys, Mark and Eric, we're in the mortgage business, and people call us up and they have the perfect evaluation of where the property's at on Zillow. Right? She just laughs, right?
We love Zillow.
Yeah, it's incredible. My home's worth X amount, and they're mad at us for it for some reason. And the reality is they got to have a fair assessment of what it is. And Zillow is often high,
Indeed,
and
yes.
it doesn't have any indication of the specifics per property. So it does a great job not bashing Zillow for what it is, but it doesn't take into account the finer details. So we have to remember that. Can you elaborate on that a little bit for us?
I like to say that the Zillow is either right on or they're 50% high or 50% low.
Yeah.
You just don't know because they're using a mass market approach. And so actually one of the things that we've done recently with one of our clients, some of the feedback we got when we visited their branch was a loan officer was asking about how he could get a better idea of what a property was worth and whether or not he should proceed with a refinance. So we kind of put our heads together and we came up with a limited desktop valuation that is USPAP compliant, and we're just rolling it out now. The cost is $150. It's a desktop valuation, a desktop appraisal by a certified appraiser who does research on a subject property from the desk and puts comparable sales together, comes up with a price range and a value number, along with plenty of disclosures about the fact that we haven't actually inspected the property. But it tends to be, we've done a few of these, we've tested a few of them, and they will say, we feel they're pretty accurate, and it's a pretty good indicator as far as if you have a property that you're not quite sure where it's going to fit in terms of value. You might be able to use it to decide whether or not you want to proceed with a refinance. And it's a service that we're providing to our clients, and that we bill directly to the borrower. So the loan officer and the branch is not necessarily paying for this service. The borrower, him or herself, is paying for it directly.
Yeah, that's super important because that can make or break. We have to make a judgment call, and me and Tina, we're professionals, and we try to do as much as we can to really identify where we think it's going to be, because we have to make some decisions to move forward based on what we think of the value. So.
Yeah, and we always try to look at the worst case and the best case scenario, and that's one of the downsides. I mean, there was when they changed the rules and brought into where mortgage companies and lenders couldn't talk directly to the appraisers. It made sense because that put a lot of pressure on the appraisers to be able to support a value that may have not been there because a competition would do it. And so I get where that came in the refinances. It did start to bring in a challenge just for this reason. So what a great service to be able to provide that. And I did laugh a little bit with Zillow, which I really didn't mean that in a negative way, because Zillow is an amazing service to get all kinds of great data.
Oh, it absolutely has its place in a homogeneous neighborhood of newer homes. It definitely, that's where it's more accurate.
Yes.
If you're looking at a neighborhood in North Seattle where homes were built in the 20s, all the way up through the 50s, and you haven't been inside, you don't know the level of updating, upgrades, remodeling, that sort of thing. It's a little less reliable.
Yeah. Well, we're starting to see, and you guys won't like hearing this as much, but we're starting to see a lot of property inspection waivers. And so for our listeners, through Fannie Mae and Freddie Mac, they have an automated system that determines the risk. And so they're looking, I'm assuming there's lots of comps and things that have been able to present itself. And then, of course, you have a strong buyer as well, great credit. And I just literally have a client right now that I'm working with that he decided that he wanted to get that appraisal anyways, because he's buying the home and he wanted a professional opinion to ensure that the value is there. First time that's happened.
Gotta love that guy.
Yeah, I gotta love that guy. So, are you feeling that we're going to be getting more of these property inspection waivers, or what are your thoughts?
Well, they have been growing in the market, and it is a bit of a worry for appraisers, absolutely. But similar to your client, we have been doing some. Back a year or so ago, when the market was super hot, there were a lot of cash buyers in the market, and did quite
Not good for us.
Not good, not good for you guys.
No.
But appraisals were ordered just for that peace of mind
Yes.
reason, even though the buyers
Yes.
were paying cash.
Yeah.
So we're still here for peace of mind, whether there's an appraisal waiver or not. And as you say, I mean, it really depends on the borrower's credit score and the value of the property and all of those parameters as to whether there has to be an appraisal ordered or not.
Yeah, that makes sense.
Eric, I was going to ask you. So I had a customer once, and they lived out in kind of a rural eastern Washington area. They got an appraisal, and it's third party. I mean, we have nothing. It is what it is, right? You do your research and the whole 9 yards, and it came back a little under where they wanted it, and they were convinced it's because the appraiser was unfamiliar with the area that they live and the dynamics, and because they're emotional about their home and their town and so on and so forth. How does your company address that?
Well, we have a formal process, the ROV process, reconsideration of value, that a homeowner can take advantage of. Typically what they do is they contact their lender and they'll present their case. The lender will triage it and find out whether or not they feel like it is something that's worth proceeding. And if it is, then they can forward the ROV form to the homeowner, and the homeowner can present their case. So they can describe the reasons why they think their house is a little bit more higher in value. Mm-hmm. They can talk about the comparable sales that the appraiser used, analyze those. They can provide their own comparable sales, and basically present their own case as to why they think the property was undervalued. Mm-hmm. At that point, then the ROV will come to either myself or to Mark or John Curtis, our partner. We'll take a look at it, pass it on to the appraiser, and then we'll work with the appraiser on it. And if, in fact, there is evidence that shows that maybe there was something that was missed, maybe there are better comparable sales out there, maybe there's something about the market that appraiser didn't know, then typically we can adjust a value if it's fair to do so. Oftentimes, I'd say it's only about 10% of the time that this ROV process actually gets taken advantage of in all of the orders that we place. And in terms of changing values, it's significantly less than that. So most of the time, the appraiser gets the value right, but there is a process for a borrower to dispute that.
Yeah.
In the meantime, through our appraiser panel, we attempt to deal with that up front by assigning the appraisal to a local appraiser,
which is a huge benefit.
That knows the market.
Yeah.
We're not reaching out to the lowest bidder who will come 3 counties away to appraise the property. Geographic competence is part of our assigning regimen. And so we've got a panel throughout Washington of over 100 appraisers, no matter what county that the assignment comes in.
Yes, we know how to pronounce Sammamish, not Sammamish, and Puyallup.
That's a good indicator.
Yes.
Sammamish.
And this is another shout out as well for homeowners in preparing and for real estate experts in helping the appraiser, because it is an appraiser's opinion and there's a lot of work that has to be done and there's a lot that's going on in the industry. So something can get missed, especially with more complicated. And the real estate agents are doing all of this work up front. 2 agents are, the agent that represents the seller and the agent that represents the buyer. So why not share that work with you? And but like you said, majority of the time the appraiser is going to get it. And there's just a lot of emotional stuff that's going in there with some of these review processes, of course. So let's talk about, we're not seeing it as much right now, maybe as the market that we came out of, but still in some areas where you don't have the comps that are there. Are pending sales, I know they're not used as comps, but are they used as compensating factors in that process of determining value?
Absolutely. In terms of, and that's where real estate agents have been very helpful to appraisers over the last year when the market was climbing significantly. And really what you needed to do was get the most recent information on sales in a neighborhood. And so when we call real estate agents and ask them about a property and when it's going to close, and oftentimes they would share with us when it's going to close and get an idea about a percentage in terms of whether or not it's sold for more than the list price. And that would help us to establish that there is a trend in the neighborhood. And we can use that in our final reconciliation process. We're not going to rely on it in terms of a closed sale because it's not closed, but we can certainly use it in our argument in terms of reconciling the value and just saying that market value is increasing, and pending sales are indicating that this is a fact. And
so on that same hand, then, when we do see an adjustment and the market drops, because at some point in time the market's going to have an adjustment down. Historically, it always, the market moves up and down. When that happens, is there pending sales that come in on the negative way as well?
It can. Typically what we see, though, is we see list prices reduced before something goes into contract.
Got it.
So an aggressive listing might be reduced once or twice and then sell, again, fairly close to that final listing amount. And so, following the crash, yes. We were looking at pending sales and we were making time adjustments negatively.
Yeah.
So it just depends on what the market's doing. Yeah.
What about the flip side of that coin? I'm going to bring up Billy Bob in Podunk, Washington again, out in the rural Washington area. What if there's no comps at all? What do you guys do?
Wow.
That's a hard one to answer.
That is a hard one to answer.
Bam.
The answer to every appraisal question, I was once told by one of my mentors, is it depends. There are always comps.
And you're still using that after 2 decades.
I'm gonna use that. Yeah, indeed. I'm gonna fall back on that
stuck.
one. It's tried and tested. There are always comparables. It's just how good they are or not, how well they match the subject. There's sales data almost no matter where you are. It just means that you may have to expand the distance that you're looking for comparable data, or maybe go back in time a little bit further. I'm dealing with a waterfront sale up north right now in a pocket neighborhood that hasn't seen much turnover. So I've had to go back more than a year to look for comparable data.
Wow.
I'm going to back that up then with market data in terms of should I make a time adjustment or not to that old sale. There's always ways to deal with a lack of data, and that's really our job. That's why we get paid the big bucks. I guess that's what they say.
Another show, another time. So as we wrap up our time here with the two of you, would love to hear your forecast and what you think is going to happen, let's say in the next 5 years in our real estate market.
Oh, wow.
I'm pushing it out
years.
there. Short-term, long-term. What do you see in the next 24 months and maybe pushing it, out? How long do you think that our market is going to continue to be a great market to buy?
Well, judging by the demographics and the statistics that I've seen, the rest of this year and next year are supposed to be solid, stable. We're not going to see the 10%, 12, 15% increases that we were seeing 2 years ago. But the conventional wisdom is we're still solid. As long as there isn't some sort of catastrophic issue with the unnamed large corporations in the area. There's still a lot of people moving into the area.
Yes.
There are a lot of, I don't know, there's been an article in the paper recently regarding condominium supply. There's going to be some more condo complexes coming online around there. Yeah.
I saw that.
Right. So, but we're not looking at the market over the next 2 years. I really would be hesitant to say anything else beyond that. With any sort of fear of another crash, '07 type bubble burst type thing.
Totally agree. And, people are always asking that. And my response back is because people can usually predict what's going to happen in the employment market a little bit more. Nobody can predict anything, but real estate's always followed employment. And, even if we do lose some of a big one, we had that big scare with the head tax. We still have a lot of companies. Every company that you can think of in the tech industry has satellite here in Seattle. So, I agree with you. Thank you both for coming in and joining Keelan and I. It's been great chatting with you and appreciate all your wealth of information, shining a little bit on what's happening in the appraiser arena.
Thank you, Tina.
Happy to be here. Thank you, Tina.
Coming up next on the Money Hour, preparing your home for sale, Stephanie Kristen with Windermere Real Estate right here at 11:50 a.m. KKNW after the short break.
As the process of buying and selling real estate becomes increasingly complex, it's important to have a trusted advisor you can rely on. With over 30 years of experience, Stephanie Kristen of Windermere Real Estate consistently uses systems that deliver results. By collaborating with her team of professionals, Stephanie makes the daunting task of buying or selling a home more manageable and worry-free. Her passion for service, combined with market knowledge, has resulted in hundreds of delighted clients.
Hi, this is Stephanie Kristen with Windermere Real Estate. There's a lot of information online today, but how you interpret that information is critical. I help buyers and sellers every day make sense of all that data. I'd love to connect with you and help you reach your goals. Check out my website, sheknowsrealestate.com, or give me a call at 206-200-0222. Thanks so much, and I look forward to talking to you soon.
You're listening to The Money Hour with your host, Tina Mitchell, and co-host Keelan Harvey on Alternative Talk AM 1150. Now, back to the show with local mortgage experts Tina Mitchell and Keelan Harvey.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell.
And your co-host, Keelan Harvey.
Right here at 1150 a.m. KKNW, the Saturday, September 29th show. We are here to help you build a strong financial blueprint 1 week and one show at a time. If you're hearing our show at a different time or day, you are listening to a rebroadcast, but we're here to answer any questions or connect you with the guests that we have on the show today. Please call the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. In studio right now, we have Stephanie Kristen with Windermere Real Estate, preparing your home for sale. Stephanie, thank you so much for joining us.
Great. Thanks so much for having me today.
And a little bit about Stephanie. After attending Michigan State University, Stephanie got married, moved to Seattle, where she started a family and her career in real estate. They currently live in Somerset, beautiful area in Bellevue, where Stephanie is an active agent in her community. She is managing broker of Windermere and has been selling homes for over 3 decades. We're talking about decades this show.
Amazing.
No kidding. Stephanie is a firm believer in giving back to her community and donates a portion of every single sale to causes like Windermere's Foundation and Plymouth Housing Group. With most of her business coming from the listing side, Stephanie has successfully helped hundreds of sellers prepare their home for sale. Today, she's going to share her tips for preparation of your home selling or living.
Stephanie, wow, 3 decades. So that's awesome. And so, we ask people about the market, but your opinion is really valuable because you've seen it all. So
I have seen it all, yes. So exactly. In fact, probably 10 years ago, I was representing bankruptcy trustees and doing a lot of short sales. And so it was a completely different market back then. And so many of the agents that are in the market right now just haven't seen, time listing on market days, in the months, and some of them have been on the market a year back in those days.
Yes.
So,
and it shows a true expert that you actually adjust and accommodate to the need in whatever market that we're in.
Yeah, exactly. I feel very fortunate to have had, the opportunity to do the short sales and that side of the market, and then move into most of my business now is repeat and referral business from, people that I know and work with all the time. So that's been good.
So what do you see it doing right now?
Yeah, so we have definitely seen a shift this year. We started off with a bang. February, we saw some of the highest sales prices in our market. March, April, strong, but then we just started, to really see and in general, we're going to see the inventory increase as a normal, people putting their house on the market in the springtime. But that really changed, and we felt it, come June. So inventory was increasing, and then it really just hit the brakes after that. So I have to say prices seem like they have come down quite a bit. We are seeing a lot more price reductions in the market, and we're seeing inventory levels that, as we talk about that in the industry, is 2 months supply of inventory. So it's I've talked about it with other agents in my office. We went from 120 miles an hour to 60. So we're still, clipping right along, but it just feels like we've really put the brakes on. And so that's it's an adjustment for a lot of sellers in this market.
So being that you work with so many sellers, I know you represent buyers as well, but you work with a lot of representation with sellers. What are you telling them when they come to you and ask that, Stephanie, is it a good time for me to sell right now? Yeah,
I think first of all, like your earlier guest said, it depends. I think you do have to make a decision that's right for you and find, make the decision based on, your personal, your needs and what's going on in your life. But we're still in a seller's market. Typically we're saying a buyer's market or a neutral market is 3 to 6 months worth of inventory. And so we have 2. Yeah. So we're still at a good time, and I really think that a properly, prepared home, priced home, and promoted home, we're still seeing those sell, really quickly within, less than a week on market. Yeah. It's still a good time to sell. But I think ultimately you have to work with your agent to find what is the best time for you. Yeah, and it's, regardless of the market that we're in, if you're buying and selling at the same time, you're never going to get the best market on both sides. For sure. You're going to win and maybe not win on one or the other side. The real challenge is if you're looking at just selling and doing something else and not reinvesting, and that's where that conversation might come in more play. For sure. And the other thing I think about this market is it does allow you a moment to breathe. I mean, it allows it allows people to make an educated decision and move comfortably and confidently and not have people, on their nerves, just rattled trying to maybe do something beyond where they should be. Yes. So I think, again, working together, communicating, I think, people can, still make great decisions in this market that work for everybody. Well said.
Yeah, that's a great point. I mean, it just amps up for everybody. I mean, when we have to move fast, decisions fast, everything's moving so fast that, I mean, you can't sit down and breathe and really let things digest. So that's a very valuable point. You mentioned something specifically about preparing correctly. So what would your thoughts be about preparing your home for a sale?
Sure. So I think that's one of the pre-marketing is one of the biggest things that we can do in selling a home. So, I provide a roadmap basically for my clients from, when they decide they want to sell to, getting that on the market. And honestly, I can probably, working with my vendors and people, get a house on the market in a week to 10 days. Mm-hmm. But that includes everything from, staging, inspections, cleaning, deep cleaning, yard work. But I feel if we can do everything to get the property looking its best, and then also help make it easy for buyers to make a good decision, that's how we can help get our sellers, the most amount of money for their property.
Yeah, 7 to 10 days, that is impressive.
Thanks.
To get all of that done. So anything else that share that's unique about your process, Stephanie?
One of the things I do think I have is vendors. I have people that my Rolodex is deep and strong. They've got, people.
And that's why you can do that miracle working time-wise.
Yeah. And I treat the people that I work with, not only my clients, but the people that help me, in the process, just treat them with the utmost respect. And I'm so lucky to have them on my team. And I think that helps translate into service for my clients. Yeah. And I just love the folks that I work with. They do a great job for me and my sellers. Yeah,
love that.
That's great. Let's change gears a little bit. So we talked about pre-inspections before, and putting their house on the market. Are pre-inspections part of your process at this point?
Yeah, I really believe firmly in having the house pre-inspected before we go on the market. I think knowledge is power, and when we control that information on the seller side, then we're able to control the process a little bit more. Doesn't mean we have to do everything on the list, but at least it limits the amount of surprises that are going to come up. And it helps us to make the decisions ahead of time. So whether we're getting a bid for that, or we're deciding to do the work, at least, I like to just negotiate once and eliminate. The other thing that I don't know that everybody understands, sellers in particular, is the way in the multiple listing, the way the inspection is written, the inspection contingency is written, it's really a free walk for a buyer in the market. I mean, when they include that contingency, honestly, they don't even have to do an inspection. So I think we need to limit that exposure for our sellers. So
yeah, that's
doing
a really good point.
Yeah, doing that ahead of time, I think that is.
And so for the sellers listening, a pre-inspection is basically you're paying for a home inspection prior to having your home listed, and then you're providing that to the buyer. So a seller may say, well, gosh, Stephanie, I'm worried about having to do a lot more work when I open up this can of worms. How would you respond to that?
Sure. So again, that part of that roadmap is meeting with the inspector. We get the inspection report back, and then we decide to do, a variety of things. One, either we're going to do the work. Sometimes the sellers do the work themselves. Other times we call in professionals to have them do the work, or we can get bids and provide those to the seller or to the buyer. Again, it's just all about having the information and being able to know what to do with that.
Yeah.
So,
would you rather have that can of worm opens at the beginning before the offers come in, or have it open after you have an offer and now you got to go back to renegotiation and you do not have the same amount of power as you had up front?
That's
so
right.
Get it all out there.
Perfect. Yes.
So what about disclosing those items from the inspection? I mean, it makes a lot of sense to me. You want to be the person with the cards in your hand and the knowledge and understand how you're going to, approach a situation, not having anything kind of come up later. How do you go about disclosing those items to others?
So I have the full listing inspection, so we provide that all to the buyer. And honestly, in general, they appreciate having that information. And instead of them having to go out and get the bids and the estimates, we've already done that for them. So again, it's all about when you're going to know it. Do you want to know it ahead of time when you control the process, or later when a buyer has your back up against the wall and you really can't do anything about it? In general, they're going to find out about it sooner or later, so I just prefer to have that sooner. And again, hopefully we can take some of those easy ones off the list so it doesn't even become an issue.
Yeah. And what are the best improvements that an owner can make if they're looking at what can they do to have the best impact?
Sure. So the other thing we do as part of the process is having a stager come through. And so part of our roadmap includes the inspection items, but then also staging items. I think the biggest return on investment that sellers can do is pack. Part of that process for me, when I have my staging come through with a walkthrough, is I provide moving boxes. Just get the ball rolling, start packing up as much, as you can, just to create that open space. I think the other thing you can do is neutralize, clean lines, light, neutral paint. Also doing carpets is another, not too expensive, but whether it's cleaning up the floors, and then the other thing we do is a deep clean. I have a team that comes in right before we go on the market. We have the windows washed, the carpets cleaned, the whole property cleaned, and a landscaper that can come out and do all of the, just prep work outside to just increase the curb appeal. I mean, for the most part, the sellers, I hear a lot of times they say, why didn't I do this before? And so, that's really, I think it's never too early to start preparing your home, to sell. And even if you never sell, it's such a lovely way to live. If you can just get those things done early and enjoy it. I have a great stager that does owner-occupied staging, and she's helped several of my clients that have moved, but to come in and just do that, even, staging for living. So.
Yeah, get the deep clean done.
That's right.
So, Stephanie, I flipped a few homes, and the first thing I'm going to do is the bathrooms and the kitchen. I mean, that's kind of the go-to because it's got that, it just changes your environment. And everybody thinks that's the biggest improvement that you could do to improve the value of your home. Is that true?
Yeah, I think that is, I think there is a lot of, when buyers are looking, I think they are the dollar sign that they apply to that. I have a friend that calls that awfulizing. They put this high value number on that. I do think there are some cosmetic improvements that you can make. If people are selling, I don't encourage them to go and completely remodel bathrooms and kitchens and put in $100,000. But if you are doing it, do it for yourself and what you would enjoy. And if you're going to stay there, I think those are great, things to do. I've also had people ask me, can I take the bathtub out and just have a 3/4 bath in the shower? Again, you're going to meet buyers that want a tub and buyers that want a, large walk-in shower. I think you have to do what works best for you.
That makes sense.
Yeah, and so have that conversation and see what the ultimate goal is of the home. Stephanie, it was such a pleasure to have you
thanks
in
so
studio.
much.
Thank you, and we look forward to having you come back.
Thanks, I appreciate it. It's been great. Thank you.
And this is your host and mortgage expert, Tina Mitchell, signing off for the day.
And your co-host, Keelan Harvey.
And we're going to be here, same time, same place, next week, right here at 11:50 a.m. KKNW. Enjoy the rest of your weekend, everyone.
Tina Mitchell, MLO 145420, and Keelan Harvey, MLO 1330075, are licensed loan originators with Gateway Mortgage Group, LLC, and MLS 7233. The views expressed by the speakers on the preceding program are those of the speakers and do not necessarily reflect the views of Gateway Mortgage Group, LLC, nor are they necessarily endorsed by Gateway Mortgage Group, LLC.